Good morning, everybody. I'm Ed Parcaut, and usually here with Mike Kelly, and we're Real Estate Jerky Daily. Mike's in Washington D.C. Yeah, it's like that old movie. Uh, Mike goes to Washington D.C. I forget what movie that was. That was old movie. Same time as the "It's a Wonderful Life" kind of thing. Anyway, let's get on to the news. It is Jobs Week this week. What does that mean? That means we talk about jobs besides everything else. And of course, Mike picked the perfect week to be gone because it's all about jobs. Today we're kind of floating stance. What that means is we're watching the market to see if it's going to improve, because right now the Dow's down 227. The bond market's not doing amazing this morning. There's been some reports that come out that kind of threw us off, and I will get into those in a second. See that we're about 11 basis point down, then 10-year sitting at 4.45, and you're all going, these are too many numbers. Sorry. The reason everything's down is because the U.S. doubled its tariffs on steel and aluminum from China and the EU. Both sides are accusing each other of breaking trade agreements, which is raising the trade war fears. And of course, with that fear, the market becomes nervous. And that's how that works. Inventory is finally growing. We're up. According to Housing Wire, we're at 803,519, which is another 16,470, which is good. That gives more offers, right? This is we're up by over 16,000. This is a healthier sign that we're getting closer to pre-pandemic levels and giving buyers more choices. There was a huge article out over the weekend. It was all over social media and everybody was talking about it. And if you missed it, you're like me. I was out by the pool and I didn't do any work this weekend. I enjoyed my time off, which is unusual. My wife told me, you better do no work this weekend. Actually, didn't tell me that, but I did. I did. Think I told Mike last week I rejoined the gym, because I have a gym in my garage, but it's all a little messed up because of the remodel we've been doing. So I finally joined the Grant gym, and it's like nice to go back somewhere and just focus on lifting. But we'll see how that works. Eventually, I'll get tired of people. All right, it's back to this article that Redfin put out. Redfin says there's 500,000 more sellers than buyers in the market. However, if you look at the numbers, just like the book, or Mark Twain said, there's lies, damn lies, and then statistics, and then how to lie with statistics. I'm not saying they're lying, but their numbers are a little off. They estimate there is 1.94 million sellers out there. But if you look at active listings, and the reason I said Housing Wire said 803,000 is because another thing said there was 960,000. So if you just skew the difference, bottom line, it's a flashy headline, but the story remains the same. Housing inventory is improving. There isn't 500,000 more buyers and sellers out there. I think they were just upset because Zillow got the award for more people going to it than anything else. And that's all your agent's fault for making Zillow such a monster, from buying all their leads for all those years and trying to get all your mortgage people to buy all those leads. And you just created this monster that's going to take over the real estate and the mortgage industry. Watch my words. Unless something happens, like things always can happen. We looked at pending home sales, and they fell 6.3% in April. A sign of slower buyer activity. We've kind of seen this since the rates and the uncertainty out there. I'll get into that more in a little bit. The dips in the stock market, we've seen more people seeing their investment drops. And when their investment drops, they're less likely to make big home purchases. And that's what we're seeing. So I was talking about, this is Jobs Week. Tuesday is JOLTS report. It's going to track how many jobs are opening and how many people are quitting or being hired. Wednesday, I have ADP employment report, plus we'll have mortgage applications. Thursday's initial jobless claims, and Friday is one of the biggest report, which they expect it to show 130,000 new jobs and unemployment to stay steady at 4.2%. This is Bureau of Labor Statistics, and unfortunately, sometimes I call it Bureau of Lying Statistics, because for almost a year they lied about what the numbers were, and so I don't really trust it anymore. It's a government number. I really don't trust it. I prefer the more private sector to tell us what's going on. There is a worry signal out there for people who make 24.3% of wealthier households think they might lose their job in the next 5 years, higher than during the 2008 financial crisis. And since this group drives much of the US spending, this fear could slow the economy. There's a lot of stuff out there, a lot of talk, a lot of noise. And I'm just telling you, if you need the house, I have helped a bunch of people lately who are stretching the seams of their house. Had another child, they really need more room, but they really don't want that increase in payment. We find ways that you to be able to buy that next house, save some of that money, pay off your debt, so your payment stays the same, overall payments, and then eventually when you can refinance, you can get your numbers down. But that's a way to look at it. Right now, tariffs are hurting trade, but stockpiling inventory before tariffs hit help offset the damage to GDP. The Fed Governor Waller says that if tariffs stay high, we could see unemployment rate rise to 5%. I don't know if that's going to happen, but if inflation keeps dropping and economy stays steady, we might even get good news. Yeah, let's tell something we don't know. Fed is talking at 1 p.m. today Eastern, and we'll see how that moves the market, because it's not what they show; it's what they say. There is we've been talking this for a while. Aging in place where more people, older, are staying in their house, and they're just doing projects to make them more comfortable while they're there. Um, but they are saying fewer remodelers are doing age in place projects. 56% of them are the lowest since 2004. However, 96% of remodelers say the customers are fairly familiar with the concept. Most common upgrades include grab bars, curbless showers, higher toilets, and wider doorways. The higher toilets are always a positive thing for me since I'm 6'2". So if you ever want to, fix that, that's basic. I don't know why they don't. I mean, more so short people, their feet dangle no matter what size the toilet is. So really, it should be made for the bigger people, taller people. Anyway, I should shut up before I get in trouble. And there is this thing called the Helper Act. They've been playing with. It's a proposed law that's part of the FHA guidelines for teachers, police, firefighters, and EMTs to buy homes with no down payment and no monthly insurance. The bill has bipartisan support, but hasn't passed yet. So why don't you reach out to your congressman, and Mike Kelly, if you're listening, while you're there in Washington, D.C., why don't you find out some more information about this for us? That is the Helper Act, and see what you can do. They're trying to make it kind of like the veterans loan, where no down payment is to help people who actually help. And I think it would be a good idea for helping firefighters, EMTs, and I don't know why they don't have. Do they have nurses in there? They should have nurses in there. Firefighter, EMTs, police, teachers. I think they should have nurses in there. I know nurses make good money in California, but not in every other state. Anyway, everybody make it a great day. I'll be back tomorrow talking about some more news. We have Jolts tomorrow, and hopefully we'll have some other news out there. But I hope everybody makes a great day, and I appreciate you watching us. And like I said, Mike will be back next week. And you have just me for now. So hopefully you like me. Make it a great day, and we'll talk to you tomorrow. Bye.